Hi, I'm Glenda Meyer with Fairway, and I'm the preferred lender for the website sdhomesearch.net. And there was a big change in interest rates this week, and I just wanted to let you know how that may be affecting you as a home buyer. So, as you know, the 30-year fixed rate mortgage is tied directly to the 10-year bond. So the 10-year bond in this last week went from 3.02 to 3.24. That was a big jump in 1 week. That made interest rates go from mid fours to sometimes over 5%. Now the bonds have come down a little bit today, so we think rates are going to get a little better, but definitely the trend is going to be increasing. There's supposed to be more interest rates increases scheduled for next year. But I wanted to give you some stats for San Diego so you know where we are right now. San Diego in last month, there were more than 10% more listings this year than last year. The sales price is up 6.6% this year from last year, but the inventory is up 21.6%. That's really good news for buyers. And the supply is up 31.8%. Also good news for buyers. So there's definitely more homes to choose from. If you're actively looking right now, you're probably noticing that as well. And the other thing I thought interesting was there was 3,714 price changes in the last 30 days in every home for sale in San Diego County. The majority of those were price reductions. So prices are definitely coming down. That's a good sign. So what I wanted to share with you is some information about how this may affect your monthly payments. So I'm going to take the average sales price of $640,000 for San Diego County. I'm using 10% down payment, which it really doesn't matter what the down payment is because we're just comparing apples to apples. And that's giving you a loan amount of $576,000. So at $576,000 at 4.5%, just the loan, is $2,918. If the interest rates to go to 5%, which is kind of what they did this week, that increases your payment to $3,092. That's a $174 increase. That's substantial, that's a big number. It starts with a 3. And, that may either kick some people out of the market or you might not be able to get into the neighborhood you really, really want. So we're anticipating about a 5% decrease in sales price. If that in fact does happen, which it's already trending that way, the sales price would go from $640 down to $608. So what that does is at 5% interest rate, so if the market goes down 5%, but interest rates stay at 5%, the monthly payment would be $2,937, which is exactly the payment it would be right now, even at 4.5%. So if interest rates are to come back down, even after the sales price goes down, then your payment's only $2,772, which is $200 cheaper than it would be on the house that you're buying today. So you can see it may not be that bad of a situation. At the end of the day, I think your payments are going to ultimately be the same. So I just wanted to give you this information. A lot of people are freaking out. A lot of people are thinking about postponing their home purchase. I think that's a bad idea, obviously. And it's still, real estate's always going to be a great investment. And you would still be buying the home for the same reason you were buying it before. And I don't think it's going to end up costing you any more money. So please connect with me today, 619-246-5525. And let's look at these numbers and see how they're going to directly affect you. I think you're going to be surprised.